Right now, the entire crypto market is being held back by the wider macro picture and liquidity. And this is basically the number one factor influencing the price of crypto, the overall crypto market, which is why it's really important to pay attention to. Basically, ever since the Fed came out and said that they were expecting less rate cuts in 2025, the entire market's been down only. Like alts have been bleeding. Bitcoin's been just going sideways or whatever, but it kind of paused its momentum. ETH has been bleeding, and overall, it's just not been it's not been very fun in crypto. The market was expecting the Fed to be doing a lot of cuts in 2025, and basically because of their inflation fears, now the Fed was saying that they're only going to do 2 cuts in 2025. And this basically kicked off, again, the recent sell-off that we've been seeing in crypto over the last couple months. But I believe everyone's got this wrong, and we're going to see way more than 2 cuts in 2025 due to some of the radical shifts that Trump's administration is in the process of making right now. In this video, I make my case for why we're going to see way more rate cuts than the Fed is suggesting in 2025, and why there's a clear path forward for the crypto markets to go much, much higher from here. Keep in mind, this is just my personal thoughts and opinions about the crypto markets. I am not your financial advisor. None of this is investment advice, and you should always do your own research. Rate cuts are powerful macro drivers that inject a ton of liquidity into the market, sending them significantly higher. When interest rates are raised, we get bear markets. When interest rates are cut, we get bull markets. Recently, markets have become extremely bearish because although it seemed like we were maybe at the start of one of the greatest rate cutting cycles of our lifetime, recent inflation data paired with the Fed worrying about Trump's tariff policies being inflationary caused the Fed to pivot and become a lot more hawkish. And if you don't know what hawkish means, basically it just means they're a lot less likely to do more rate cuts than we had previously expected. Or put even more simply, they're a lot less likely to let liquidity flow into the markets because they believe by holding back liquidity, they can best stamp out inflation. The Fed really wants inflation to be around 2%. And inflation is basically the rate at which everything becomes more and more expensive. In the 1950s, the average house cost around $7,500. Today, the average house costs around $380,000. In simple terms, that's because of inflation. For example, if inflation were sitting at around 50% and you had $1,000 sitting in your bank account and you waited 1 year, that $1,000, even though it'd still be worth $1,000, would buy you 50% less things. It would, for all intensive purposes, be the equivalent of what $500 would have been a year previously. And the way that this is reflected is that the price of everything that you buy goes higher in dollar terms to adjust for the devaluing of your dollars. That's why back in the day, a nickel used to buy you a hamburger. 1 nickel used to buy you a hamburger, where today that same nickel is literally worthless. You couldn't spend it on anything. It used to buy you an entire meal. And today it's worthless. Like you would throw it on the ground and not even care about it. The value of a nickel has diminished. It can't buy as much stuff as it used to buy 100 years ago. So that's inflation. And you could understand why the Fed might want to keep inflation lower rather than higher. And the number one tool the Fed employs to keep inflation rates under control is rate hikes, is raising the interest rate. By hiking rates traditionally, the Fed could slow down the economy and therefore slow down inflation. But you might have noticed I said traditionally, and that's because a lot has changed in modern times, and the Fed's once super effective weapon isn't very effective anymore. The problem today is that we operate in what's called fiscal dominance. Basically, a lot of our economy is dictated by government spending. A huge portion of the population is either employed by the government, directly receives income in one way or another from the government, or just indirectly relies on the government for their source of income. And this makes it so rate cuts' effects on the economy are drastically diminished. Despite that, the Fed really doesn't have a choice when it comes to taming in inflation because they only have so many weapons at their disposal to rein it in. They're only given so many tools in their tool belt to try to squash inflation, and that's their number one tool, so that's what they use. And right now, the number one thing holding the Fed back from cutting rates is inflation worries. If there was no inflation worries, if inflation was sitting at 2%, then they would be cutting rates. But because it's not, because inflation isn't sitting at 2%, that's why they're not cutting rates, because they're worried about it reaccelerating like what we saw in 2021. However, keep in mind, this is the same Fed who in 2021 said that inflation was transitory and that they would absolutely not be needing to hike rates, only to just months later hike rates faster than ever before seen in history. Here's why I believe the Fed is once again wrong, and we're going to see way more rate cuts than just 2 in 2025 and a lot more bullish momentum for the crypto and wider markets. First off, the concerns about Trump's tariffs are widely overblown. I've talked about this before. In Trump's first term as president, the effects tariffs had on inflation were negligible. There was zero meaningful increase in inflation due to tariffs. And that's not to say across every sector. There were certain sectors that did have price increases due to tariffs. But I'm saying across the board widely, like as a whole, the market, there was zero meaningful increase in inflation. And that's mostly because either distributors or producers ended up absorbing those costs. So they didn't pass the extra costs along to the customers. They absorbed those costs instead. Secondly, deregulation is massively deflationary. And regulation is the opposite, massively inflationary. Think of all these crypto companies due to the like really heavy-handed regulation that we've been in the last couple of years in crypto, who've had to pay these millions and millions of dollars in legal advisement. Or any company that has to hire countless people and pay all sorts of legal fees to make sure they file all the right paperwork, comply with the endless regulations, get all the right permits, pay all the right fees, etc. Those are extra hard costs that go into a business, and those costs get paid for by the people buying those products that business makes. Regulation means increased administrative burdens, and that causes higher production costs. You also get reduced competition due to all the complexity that's required and the upfront costs in a lot of cases. Like there's a lot of people that can't start a business because it's too expensive, to go through all the legal fees and to hire all the right people to even get off the ground. And the more competition you get in any industry, the cheaper costs tend to go. So if you only have one or two suppliers for some special drug or whatever, they can jack up costs really high. But if there's 100 of them, they get into price bidding wars, and it gets pushed down as low as it can go where they can still make money. In some cases, there's businesses like Walmart that'll actually sell under their hard cost in order to get like a competitive moat. So and get more competition pushes prices down. So regulation is super inflationary. And a good way to think about this is maybe with housing. I think most people maybe can easily relate to this when it comes to housing. In the Bay Area, just the impact fees on building a new house, aka the fees charged by the city upfront before you build anything, can exceed $100,000. That means at bare minimum, building that house costs $100,000. That's before the cost of building supplies, actually buying the land, the cost of labor, or doing anything else. Plus, there are all sorts of permits, from building permits to grading permits to environmental permits to zoning permits, and it goes on and on and on. All of these things massively inflate the cost of building a home. And if you were able to substantially reduce all these regulations, you could massively reduce the cost of building a home overnight. Not only that, but because you reduce the cost up front and therefore you reduce the risk of building a house up front, you're going to get more competition that comes onto the scene, which is going to then further push down the cost of building a house. Now imagine that not just across housing, but across everything. Bureaucracy across the board going down. That's a formula to absolutely obliterate inflation. And as I mentioned earlier, if you could get rid of inflation worries, then the Fed is able to cut rates to their heart's desire. They could cut rates as low as they want at that point, because the number one thing that they're worried about right now, inflation, isn't a problem anymore. And we're already seeing Trump take drastic steps to make all this stuff happen, to massively deregulate a lot of these industries across the board. And I think one thing that maybe a lot of people might not realize is this is a long-held belief by Trump, is that the governments are massively bloated, there's too much bureaucracy, and they're extremely wasteful and inefficient. Now, there's another set of policies that the Trump administration is doing that I believe is going to have a massive impact on inflation and cause inflation to be a non-problem going into the future. And I believe this is going to help usher in a rate-cutting cycle that's going to send crypto skyrocketing. And I'm going to talk about that in just a second, but really quick. The Obsidian Council is my private research community where I share monthly research, my entire portfolio, buy and sell alerts whenever I buy into a project, and more. We've had projects go up 1,100%, 1,200%, 1,500%, and some much more. I spend a lot of money to access a variety of newsletters, private groups, and more so I can get the best alpha in the market. And I share that alpha with the members of the Obsidian Council. Currently, the Obsidian Council is sold out and closed to new members. But if you want to join next time it opens up, make sure to join the waitlist in the description of this video. Okay, so one of the core drivers of inflation is energy costs. If you could massively reduce the cost of energy, you can massively reduce inflation. That's because energy costs are built into everything. If you ship anything anywhere, that's going to take energy costs. If you run a business, that's going to take energy costs. Everything runs off of energy. So the cost of energy is in everything. And everyone's heard Trump, promise that when he gets into office, he's going to drill, baby, drill. Basically, that he's going to massively accelerate our domestic oil production so that we can have a lot cheaper gasoline, a lot cheaper oil in the US, which of course, that alone, that by itself would already have a massive impact on inflation. If gas prices are a lot lower, That's going to have a huge impact on inflation. However, I believe we're about to see a lot more than just that take place. The US has been getting absolutely obliterated when it comes to energy production. And the stakes have never been higher with AI, robotics, and more, causing massive shifts in everything from warfare to the wider economy. Put very simply, energy is becoming increasingly more and more important for everything, and the US is massively lagging behind. And I've listened to hundreds of hours of podcasts from Trump, from JD Vance, from his pick for Treasury Secretary Scott Bessent, to his crypto AI czar David Sachs, and a ton more. And quite a few of them have talked about on multiple occasions this plan for like unprecedented energy build out within the US, specifically nuclear energy build out within the US as a national security priority. They basically want to streamline the regulations and open the door for more and more private companies to come in and innovate when it comes to nuclear energy and build out more nuclear energy within the US. Obviously, they don't want to get rid of all regulation around this. And I think a lot of people don't understand that nuclear energy has become a lot safer in modern times than what we've seen in the past. In fact, there are nuclear facilities today, nuclear energy facilities today. They don't have the same meltdown properties that have caused some of these huge disasters in the past. They don't have those same risks. We just haven't modernized our nuclear energy production in the US. Regardless of what your views are on that or on national security or whatever, that is their plan. That's what they want to do. And that is going to have massive implications when it comes to inflation and causing a disinflationary effect. If you have abundant, cheap energy, that is really, really disinflationary. I'd argue that rapid energy build out all on its own is going to be like 10 times more impactful on inflation than anything the Fed could do. So as I've highlighted, there's a lot of reasons to believe inflation is under control and is going to get rapidly more under control, and it's not going to be an issue. And we already know that Trump wants Powell to cut rates to zero. He says it all the time. I believe if you pair all these things together, there's actually a really solid argument on why the Fed is likely to cut rates all the way down to 0%. That's because if inflation isn't an issue, cutting rates down to 0% makes a lot of sense for the US when it comes to our interest rate payments. We pay a lot of money in interest. It's one of our largest expenses in the US. In fact, in 2024, our interest payments exceeded the cost of our national defense budget. We were paying more in interest than our entire national defense budget. So you can imagine if we're able to reduce rates to zero, then it would represent a massive cost savings. And at the end of the day, I believe Trump is going to end up getting what he wants. Him and his new Treasury pick, Scott Bessent, are on the same page and have considerable power when it comes to making all this stuff happen. Scott's actually been one of the biggest ones on the podcast scene advocating for this energy build out plan where we get a lot of cheap, abundant energy in the US, how that could impact inflation, how we need to catch up when it comes to the being competitive on a global scale, and why that's going to help us get rates down massively. The final piece has to do with Doge and Trump's government-wide hiring freezes. Like I mentioned earlier, we're in a fiscally dominant environment where government spending steers the ship. Trump is massively reducing spending and hiring when it comes to the government. That'll put pressure on the Fed as it's both disinflationary and also it's going to mean unemployment numbers is going to go up, which is a thing that the Fed doesn't want to see. They see unemployment spiking, they start to freak out, maybe the economy is not in a good place, and that's going to cause them to cut rates. Put this all together, and I believe we have a formula for getting a lot more rate cuts than the market is currently pricing in, or right now everyone's just saying 2. I believe we're going to get a lot more when you put all this together. The key ingredient, as always, is when. Are we going to see this in the later half of the year? We're going to see this in the earlier half of the year, and what's in the midterm? How is it going to affect crypto prices? To which I would say that is extremely difficult to say and extremely difficult to predict. Some of these things will certainly take time. The markets are forward-looking, so you don't have to experience all that stuff built out in order to get sometimes the result of what happens. And Trump does tend to move faster than your average politician. Regardless, this is an extremely powerful bullish catalyst to keep your eye on. As always, none of this is investment advice. I am not your financial advisor, and crypto is obviously risky to invest into. Make sure to sign up for my free weekly crypto newsletter. It's mostly just all my content I put out each week in an easy email so you don't miss it, but occasionally I drop some other cool stuff in there as well, including sometimes I mention things I'm buying before I ever talk about it on my YouTube channel. Also, if you really want to dive deep, make sure to check out my weekly podcast, the 1 to 1 Million Podcast. I interview projects, talk about the markets, and interview various traders and experts in the crypto space. If this video is helpful, make sure to hit that like button. If you have anything else to add, let me know in the comments down below. And if you want to see more videos like this, make sure to hit that subscribe button and the little bell next to it to be notified each time I release a new video. Thanks for watching, and I'll see you next week.